Welcome to the weekly Forex Bunker Master Candle review. We're going to start off with GJ this week. We had a pretty good week this week with 3 trades. The first one on GU was a 72 pip Master Candle with a gain of around 50 pips. We'll talk about that right now, but it was a nice break on the second or third break candle. Now where we were aiming for is somewhere between here and this top zone, so that's a pretty big difference. You could even add this line here as well, somewhere between there. But as a strong push up, the next couple of hours were both dojis, and that was a great sign to get out. So around 50 pips gain there. It shouldn't have stuck around after those 2 dojis. Or you could have held on for break even, which would have been hit, but we'll count that as 50 pips. The next master candle was right after it, which was a 43 pip size master candle. It broke on the first break candle, and we were aiming for around this swing here to this level here. So that was around 50 pips as well. So a total of 100 pips on GU this week, which is quite good. We'll get on to GJ now. This first one we'll deal with that second. Just these 2 down here were both no trades. This first one, no break on this one, this B1, B2 or B3 candle. And the second one we had no break on the B1, B2 and B3 candle. But you notice on the B4 it did break both of them, so it would have been a nice short. We'll just measure that. If you decided to take it, 74 pips, but you would have aimed for about that swing zone, at least. Let's make sure that's right. About 36 pips, give or take. But yeah, they were both no trades. Now, on to the first trade, and let's spend a bit of time on this one because there's a lesson about stops here that I want to share. This one broke on the B2 candle at 81 and quickly retraced. Now, technically we were stopped out by 2 pips. While I was in this trade, I actually held on, and I'm going to explain the reasons why. The first reason is I do not use stop orders. I take myself out of the market, and the reason for that is the amount of times that I've been stopped out by 1 or 2 pips and then reversed towards profit, I lost count. So I stopped that and just take myself out of the market. Granted, you can take yourself out of market 10 to 20 pips late further, so you're down a little bit more cash, but in the end you get to learn when to hold. Now, the reason I held for this was a couple. Firstly, you notice this huge gap, and the market had not closed the gap yet. So this stop was basically within the gap. So I placed my mental stop above here. Now granted, it was a little bit further, but it was the smartest place and most logical place to put it. Because if the market did move up through this zone, it would mean that the master candle had failed. But between the gap zone, in my opinion, the master candle had not failed because the gap hadn't been closed yet. This is why I urge you to trade smartly and not just follow any system blindly, regardless of what you're trading, whether it's the master candle method or whether it's another method. Following something blindly will just lead to pain in the end. So this trade quickly turned around, and we're aiming for the next support zone. How we found that was we used the weekly chart. We'll just skip to that, and as you can see, our next support and resistance zone was the 13341 level. So we're aiming for that as our profit target, and you notice it did go further, but that doesn't matter. You could have held on here, but for the records we will be including 130 pips for this trade. Yeah, so I can't reinforce enough, when you are trading, if you are in front of the computer and able, use alarms like they're going out of fashion, and take yourself out of the market. Don't let stop orders take you out of the market. Let it be your choice, not the market's. Alright. I hope you all had a great week. Thanks for watching the video, and come and check us out at forexbunker.com.